Hello everyone. Hope you have a great weekend so far. And next week will be spring break. Hope you get time to enjoy off and get your mind out of the stock market for a while, and just enjoy the weather. Thank you very much for your support. And unfortunately, last week there really no good news to share. The focus was still about the war. So I want to quickly just go over the some of the graph of the index, so to give you some idea where we're at this point, and what we're projecting the following week or so. So really Nasdaq is the one that really got hammered and really much more pressured. And if you look at it in a year basis, it's really at 3.5% down compared to the same period last year. Dow Jones Industrial Average, however, actually if you use a year to compare, is actually still up 0.51%. You probably won't think about that because the market have been really bad, and Dow have been the strict fifth week of losses, but yet it's actually still positive compared to from a year to year comparison. And S&P 500 is still at this point was the best performer out of those major indexes, and at 6.62% up compared to the year to year. And just want to really pointing out that Nasdaq actually, if you look at the timeline, it dropped 18.8% if you compare to the January, the beginning of January. So it's down 18.8% at this point. And if you look in November, which pushed back fast forward and which is November 17, it had dropped 30%. So, the way I look at this is, if the market continues to slip, we are already in 18.8% territory. There will be a chance to slip it back to November timeline, which is then will be kind of like 30% drop, down at that point. Dow Jones also, if you look at last 2 months, just to put things in perspective, you really down 2% last 2 months. So since the beginning of January, it's down 10%. S&P 500 down 12%. At the beginning of the year. So despite the S&P 500 showing you a positive territory and year-to-year comparison, if you look at the beginning of the year, you can see this is where the high point is. It's actually keep going downward and slip. There was a huge rebound there, but then it came, from a month, 3 months perspective, it's still down 12%. And the last week, again, the market wasn't very, very, very pleasant and very well received. With the war and potential issue, except when Powell came out to say something about potential interest rate, how his perspective of it, which 16 will be the day we actually know what he's going to announce of the interest rate and what is the future outlook going to be. And the major task again is within that is full employment guarantee, and also really the inflation is the focus. Market slipped due to oil price surge and ongoing war in Ukraine. That's not something surprising. For those who follow my video, knowing that I say if the war things are going to be bad and not pretty. During intraday Tuesday, Dow Jones Index uplift 600 points but pulled back on in the afternoon. Consumer discretionary select sector share plunged 4.9%, followed by technology 3.7% sell off. Material dropped 3.5%. Commercial service stock declined by 3.3%. That was like Monday and Tuesday timeline. Actually, at the end of the week, it was actually even down a little further than those percentages I just shared with you. The Chinese index extended downside breakout on the continuation pattern, which helped bear complete a massive top since mid-2020. Bitcoin has slipped lower than 36,000, but rebound on Wednesday after President Biden's executive order on cryptocurrency. Treasury yield climbed while U.S. oil price slipped more than 5%. And cryptocurrency rebound to 45,000 at one point. Now it's slipping back again at 40,000 at this point. Oil prices crashed 11%, driving Dow Jones rebound by 600 points, and Nasdaq was up 3%, recovered part of the early losses of a week. Apple, a simple Apple AAPL rose 2.1%, Microsoft rallied 2.6% on Wednesday. United Health soared, Nike soared to the head of the Dow, up more than 5%, and Tesla rebounded as well. But of course, at the end of the week, Tesla was actually not performed very well. It's 800-ish again. Amazon said on Wednesday it bought approved 20-for-1 split of e-commerce giant common stock and authorized a $10 billion buyback plan. So the news that came up at the beginning saying Amazon would do a split, the stock had gone up a week or so ago, and now it's having confirmed, so that day the price also had gone up. Obviously, that is no-brainer, but of course, Amazon again is a very expensive stock, so for retail investors, it's really even hard to buy one share. The U.S. Securities Exchange Commission take a really tough look at Chinese stock and investor taking notice. So there's also talk about delisting again. So that actually driving the Chinese stock really tumbled very huge time. Alibaba was really pledged as much as 10% Thursday after a regulatory agency identified Chinese company for potential delisting. The 5 companies identified by SEC were Beijing, Yum China Holding, Sign Lab Limited, ACM Research, and Hutch Limited. And the Yum China, who owns the franchise right to KFC and Taco Bell in China, fell as much as 15% following the SEC notice. K-Shan CSI China Internet ETF fell as much as 10% Thursday and down more than 70% from its record high. I mean, they really get very bad tumble. But for those who listen to the video again, knowing that some of retail stock, which grew stock actually from a peak to the point like a week ago, probably now too, because it's really at the very low end of the index, they will got beat up like 90% discount now. So if those stocks survive and not gonna go bankruptcy, then maybe it's good buy, but it's very hard. So investors really have to be very careful about how much money you can put in these stocks, and what and why you're buying those stocks now. Okay, particularly if you look at long term, like 2024, 25. Signs of weakness in consumer, which is a key driver of economic growth, overshadow hopes for Ukraine-Russia agreement on a ceasefire. Dow Jones Industrial fell for 5th straight week, just as I told you earlier, and the S&P 500 fell for the 2nd straight week Friday, as selling intensified in the close and sight. Elevated inflation is hurting the consumer. Tesla, symbol TSLA, Las Vegas Sands, symbol LVS, and ETSA, symbol ETSY, led the losses in consumer discretionary stock, if the later fallen by more than 11%. Technology gains a day earlier proved short-lived as set to resume its sell-off. More and more companies are exiting Russia and write down their asset to $0, like Shell, like BP, not just oil company, right? It's also the Starbucks, McDonald's, stop doing business over there, highlighting the heavy loss experienced by some multinational company. The investment giant BlackRock said is facing losses of over $17 billion on its holding Russian asset. So next week the focus will be Fed interest rate hikes and see how much. Right now the market probably anticipate a quarter point, so it's really hard. We'll be raising 0.5%, but I really not gonna bet, and I don't think Powell will come out and say no, that we're not gonna rise interest rate this quarter because of the war. But we'll see. I mean, if that happens, the market should rally probably great time on that day. But it's very hard to justify at this point on that because you have to fight the inflation and oil price continues to soar. Oil price actually have jumped up to the highest in $130 and pulled back to $108. But still, relatively speaking, if you look at the oil price chart, which I will show you on the next video next time, it's really from a year you have gained tremendously. All the oil stock, well, because of the news, some got beat up, but still up about 25% year to date. Year-to-year comparison. So right now, and just to give you an example, in Hong Kong, I mean, they're really tumbling. Because of the pandemic outbreak, it was from 29,500 dropped to current level to 25,53. That's 30% lower from the peak. So if you look at the index of the US major index, you haven't really hit 30% yet. So there's another 10% to go, just like I described at the earlier video. Hopefully there will be a rebound as you get closer to April. You're going to be going to the window dressing, and then with the quarterly earnings announcement, we're showing some stock will be very resilient, mostly the big FAAMNG. Hopefully there will be a big rebound for them. And then some other groups start that's showing actual rather than a loss will have a profit. And let's look at this, so we'll see how things going to, play out next week. Right now, just don't have any good news, unfortunately. So let's hope for better to come before the worst gets over. And hope all of you have a quick and wonderful spring break, and enjoy and stay healthy and be happy. Thank you.